Soaring tensions between the US and China as a trade war builds up, Brexit and the coronavirus pandemic affecting the markets. We'll also look at the economic data from the economic calendars across all the currencies. The man to help us with all this is Bob Mason of FX Empire. This is your week ahead. Hello, Bob, and thank you once again for joining us. Let's start with the major currency, shall we? It's the last week of the month. What can we expect, and what should our traders be looking out for?
The week ahead, it's pretty quiet for the pound. There's no material stats to consider for the pound in the week ahead. So you've just got BOE Governor Bailey scheduled to speak at the end of the week. So for the pound, that just leaves Brexit as the key driver, with talks resuming last week. For the euro, it's a relatively busy week. We've got second estimate GDP numbers out of Germany and France to consider. Markets will be looking for some upward revisions to those. And then we've got IFO business sentiment figures out of Germany and GfK consumer numbers on Friday to consider. And for France, we got consumer spending numbers at the end of the week as well. So enough numbers for the euro, in the week ahead to keep things interesting. For the dollar, it is a busy week ahead. So there's plenty to consider. Key stats will include consumer confidence numbers in the first half of the week. And then we've got core durable goods orders and durable goods orders, so expect plenty of influence ahead of the weekly jobless claims figures on Thursday that coincide with the release of second estimate GDP numbers. So those will be the main areas of focus. At the end of the week, personal spending figures for July and finalized consumer sentiment numbers for August also in focus. So busy week for the dollar, not so for the pound, and relatively busy for the euro.
So some interesting stats there that our traders should definitely be looking out for. Let's move on to the Commonwealth currencies. How are they going to be faring next week?
It's a relatively quiet week for the commodity currencies. For the Aussie dollar, you've got construction work done and new capex expenditure numbers, so that'll garner some interest in the week. For the Kiwi dollar, a little bit more interesting, retail sales figures and trade data, so expect plenty of influence from those numbers. And for the loonie, quiet start to the week, but a busy end. You got GDP numbers on Friday that will garner plenty of interest. Obviously, dire numbers will weigh on the loonie, though expect, obviously market risk sentiment, US-China tensions, and, oil prices to also continue to provide the loonie with direction.
Okay, so all quiet on the commodities side. But how about Asia, specifically Japan and China? What should our traders be looking out there for next week?
For the Chinese yuan, there's no economic data in the week ahead, so there's nothing to influence the yuan. So that will shift focus to, US-China tensions, whether there will be any discussions on a trade agreement. Trump said he had no interest in talking to them. He's trying to distract the markets now, so he's attacking the tech sector. So expect any chatter from Washington and Beijing to be the key drivers for the yuan. And then for the Japanese yen, also quite a week, just inflation figures at the end of the week. So nothing there, to influence the Japanese yen either.
So it looks like it's going to be a pretty quiet week across the whole of Asia next week. But let's focus on geopolitical risks. US-China trade war, Brexit, the COVID-19 pandemic, and the US elections coming up. Plenty of talking points there, surely.
Yeah, in terms of the impact of COVID-19, on the global economy, you've got US-China trade tensions and, the failure of lawmakers to pass through the COVID-19 stimulus package, on Capitol Hill. When you look at the equity markets, we're seeing record highs again. We've seen a complete reversal of the losses seen through, the COVID-19 pandemic. And we're not seeing, the pandemic abate anytime soon. And unemployment is still, sky high in the US in particular. So there is a disconnect there between the US equity markets and the bond markets and even the currency markets. So need to be quite cautious with that. Obviously the Fed's plowing money in, central banks are supporting the financial markets, and this is propping up the equity markets. But that may stop at some point. And we saw the Fed's, shift in forward guidance impact the US equity markets late in the day on Wednesday. So, that's something to look out for. But economically, we're going to need to see unemployment materially improve in the US and other key economies to support a more rapid economic, rebound. And when you're considering, new spikes in COVID-19 cases being seen across key economies, there is some concern. We're seeing central banks highlight that, and that's raising uncertainty over consumer spending, confidence, and ultimately, private sector activity.
Well, lovely. That's all for today, Bob. Thank you so much for joining us as always, and I will see you again next time. That was the week ahead with Bob Mason of FX Empire. But in the meantime, keep up to date with all the latest developments and what's going on in the markets by following us on all our social media outlets.